Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis, Wednesday, August 20th, 2014. Here's a daily chart of the SPY, and the march higher continues. So I thought what was interesting today, and it's really meaningless, but it's worth noting nonetheless. The SPY made a new closing high today. We closed at 199.01, and the old close was 198.65. And here's a chart of the actual index, the S&P 500, or the SPX, the cash index. And this didn't make a closing high. I don't really make anything of it. I don't think it means anything. I think we get to S&P 2000. It's so in the cards right now. We're so close. They have to push it over 2000. Whether it happens this week or Monday or sometime next week, I don't know, but it's going to happen. Yeah, even let's go over and look at a 10-minute chart. This is an intraday chart of the SPX. Actually, I like the S&P. The SPY better. So. This is what I trade, so therefore I like to look at this. I know the numbers. So the 10-minute chart, okay, today, what'd you have? You had an open down here, okay. I said yesterday that today was a likely down day, and then maybe into tomorrow, and then a float higher Thursday and Friday, or the Thursday afternoon into Friday. And I made up a thesis about the central banks meeting in Jackson Hole and the Fed and all that stuff. And what happened was I was right for like a minute. The market opened slightly down. I thought maybe it would go down and maybe come to this gap fill, or this gap window, and then maybe fill the gap, and that was about it. But, excuse me. But as soon as the market went down at the open, it came back up, floated up, tried to come back down one more time in the afternoon, no go, floated back up. And there was an interesting news story that came out that I wrote about in the blog post today, which was I heard one of the analysts on TV say the market moved up at the end of the day because the news came out. Bank of America had a settlement of $17 billion. I think it's either 16.5 or $17 billion with the Justice Department on all the subprime mortgages and all that stuff. Well, how could that be a reason that the market went up when they're taking $17 billion out of shareholder value from Bank of America? It's the shareholders' money. Nobody gets punished. Nothing's happening to anybody that was involved, except maybe there's a case coming against Angelo Mazzillo from Countrywide on a civil basis. But nothing happens to anybody. They just penalize the current shareholders versus penalizing people that actually did the deed in the past. It just makes me wild. It's unbelievable. Anyway, so the bottom line is you floated up. And so let's get back on track here. So, you're going to make new highs. The S&P is going to push over 2,000. I still say you're going to get a down day or two in there before the Labor Day holiday weekend, which is next weekend. But, it's at this point, I don't see it happening this week, only because it didn't happen today, and you got the Fed meeting, and yeah, there'll be some rumors, but I just don't see a big sell-off right in the middle of the meeting, right before Janet Yellen speaks on Friday, and maybe Monday, Tuesday, Wednesday next week, somewhere in that neighborhood. That's my best guess, but it's just a guess right now. So don't do anything based on a guess. We don't know what the market's going to do exactly from day to day. We can just read the patterns, let the market tell us what to do. And right now the market's in float mode. Let's go over to the daily again. This is a strong market, right? It came down 10 points in the S&P or SPY, and then right back up, like nothing, no problem, like it never happened. Well, what's going to happen is we're going to float up some more, and then in September look for another down try here. Let's go over to the weekly chart, and I'll just show you kind of what I'm looking at. You have these humps here. You have these small corrections. You had a correction here. 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 Well, not necessarily because of that, but my belief is, based on my analysis, that the next correction is going to come down and give us a nice 20-point correction on the S&P, or 200 points in the S&P, 20 points in the SPY. So that's at a minimum. And then from there, you see what the pattern looks like. You see how it reacts. You see if it makes a bottoming tail or it makes sideways, bearish wedge or a flag pattern. And then you kind of see what happens from there. But that's my take. The market's going to shake out some of the weak hands, and that's just the way it is. But we don't have any evidence that's happening yet. We're going to wait for the market to tell us what to do, so we don't do anything ahead of that, because I'm telling you, the market can stay elevated much, much longer than most people can stay solvent in their own account. And that's why you don't short light volume, strong market, and uptrend. When you see these two moving averages, this 20 and 50 period moving average on the weekly chart, when you see these things kind of just ride up in a parallel fashion like railroad tracks, okay, until this starts to bend over, nothing's going to happen. What I mean by that is you can't get a big break in the market until this starts to roll over, and then ultimately the 20 has to cross the 50. So right now, as long as these stay parallel in these railroad tracks, nothing's going to happen. This will stay this way even if it comes back into this 20-period moving average, even if the S&P comes back down to here. Look what happened here. Came back down, albeit this was a one-week move. Came back here, didn't budge, right? It's still these railroad tracks. So keep in mind that on a weekly basis, on a longer-term basis, as long as you have these tracks, nothing's going to happen until you break. Okay, you have to break and you have to confirm on a weekly basis below this 20, for example. You never did, right? You broke it, pop back up, broke it, pop back up, broke it, pop back up. Until you break it and have a second week below it, nothing's going to happen. So that's really technical analysis or common sense analysis 101. Okay, any analyst, any technician will tell you that that'll hold true. So this is a strong market, and we're going to play it that way. So I spent a lot of time in the S&P tonight, so we're going to run through a couple other things. Not much else happened anyway. Gold was basically a non-event. GLD was down 46 cents, but it's still drifting lower. And I'm going to say it again: time and price, time and price, time and price. That was a weekly chart. Let's go look at the daily. So we came down into this 200-period moving average. I still say there's more downside. We're going to let the charts tell us what to do, but time and price, just not ready yet, folks. As for oil, you had a really small bounce today. It was up earlier in the morning, a little bit greater in the crude contract, but USO, meager bounce. I wouldn't even call it a bounce. It's just a pause day. More downside to be had. Let's go over to the weekly chart to refresh. And on a weekly basis, okay, you have to be looking down here at this pivot low here. This is about 34, a break of 34. And if you came into it in a straight shot like this week, that's probably worth a long play. But before that happens, there's no play in oil. You don't try and catch the falling knife. You'll only catch it 1 out of 5 or 6 times, and the other 4 times you'll cut your hands up. So interest rates, not much happened today. The VIX drifted down a little bit. Here, the VIX is worth looking at because the VIX, you know what, I'm going to stay on the weekly. The VIX, look where we're going, okay? We have 3 weeks of down move in the VIX here after this one big up bar. So now we took out this low, which means we're no longer going to hold this uptrend. Okay, so now we're back in a downtrend. But where are we? Look where we are. We're at these lows, or close enough to these lows. Okay, 1, 2, 3 more quiet days float up in the market, and you're down at that level. And look at the monthly. Okay, what happens down here? It just doesn't get down below there much, and every time it gets down there, it pops back up. Let's go over to the weekly again, okay? What happens every time it gets down to these lows? This low here, this low here, this low here, here, down here. So if we can come down here, what's going to happen next? The VIX, I'm telling you right now, the VIX is not going to 7 or 8, okay? It's not happening. So if you see 10.5 or 11, that's a great opportunity to buy some longer-term call options on the VIX. And when I mean longer-term, you got to give yourself a couple of months. Since we're coming into another area where I think the market's going to have some increased volatility after the Labor Day weekend. So if we saw over the next, let's say, week or so, into next week, the end of next week, if we saw the VIX down at 10.5, 10.75, 11, okay, guess what? You can buy some calls for October on the VIX, and just hold them for a while. You know that your downside is relatively limited, and if you break this low convincingly, then you can move out of the options and lick your wounds if you want. But, if you're playing options, then you know to hold your risk to a minimum. You know that you can lose all of the position if it goes against you. All those things. If you don't know all those things, then please don't play options. They're much more riskier than buying stocks, but that's a way to play the VIX. It's a way to play the increased volatility, because when it comes back, look how it comes back. It comes back with a vengeance. You're going to go from 11 or 12 up to 17 in a minute. That's what happens almost every single time. The next time, if I'm right, and we get a 200-point move in the S&P, and that's not going to all happen in one day or 1 week, but just if we get that kind of a move, the VIX is going to be over 20. So if you buy calls at 10.50, 11, and you pay, let's say, $1.50 for, or maybe $1.75 at the time for October's, okay, and they go up to $20, that's a huge win, right? That could be the way it'll work out, it'll be about an 8 to 10 bagger. So, that would be a monster trade. So, just we'll pay attention to that, and I'll keep you abreast in that one. I kind of like the concept there for a small play. You got to keep that one small. Let's just look at a couple other things, and then I'm going to wrap it tonight. Let's look at some comparables. Let's look at the S&P 500. Okay, whoops, sorry about that, folks. S&P 500 on a weekly. No, let's look at the daily chart. All right. Now watch this. Making new highs, going higher. Okay. Now let's look at the Dow. All right, I did this last night too. Not yet at new highs. This is what's called, when we make the new high in the S&P, and this doesn't make a new high, this is called a non-confirmation. Okay, so we're not getting confirmation from the Dow that the entire market is vibrant and headed higher. Okay, let's look at another index, the Russell 2000. This is the actual Russell, not the IWM. This is the Russell 2000. We're nowhere near a high. We came into the 50% retracement from this move down to here, 50% back, 50% back home, and then we're stalled out, and we're not even close to the high, right? So, and let's look at a weekly, because it's going to even be more pronounced. Okay, here's a high. Okay, here's another high. We're not even close. Okay, so this is a weak market. However, let's flip over to the NASDAQ market. All right, this is the composite. All right, we're over 4,500 and we're at a new high. This is like a 14-year high. Okay, so again, like I said last night, not much to make of this. I can't tell you that one thing's going to happen or another because of this, but these are things that are important, and as they continue to develop, they give me signals along with all the other things I look at of what's coming. So I just thought I would make mention of it. I think it's important to keep an eye on, yet I can't make anything out of it to make a definitive call yet, but we should be able to soon. Anyway, that's going to be a wrap tonight. I'm David Frost, mystrategicforecast.com. Thanks for tuning in, folks.